Well, there hasn't been the usual spring to the spring housing market in the GTA. Sales in April were down by 23% over April of last year.
So let's take a look at what's taking shape with TREB's Chief Information Officer, Chief Market Analyst, I believe, actually, Jason Mercer. Jason, let's talk about this. The spring appears to be broken. We typically think the spring market's going to be kind of this boon. Realtors like, get your house on the market now. What happened?
Yeah, I mean, I think initially as we were moving into 2025, we were expecting to see, a continued downward trend in borrowing costs. And obviously we haven't seen a lot of movement in price. So that presented a real affordability positive for a lot of would-be home buyers. But I think, given what's gone on south of the border with trade relationships and what have you, there's a lot of households that are taking a bit of a wait-and-see attitude before committing to a large ticket purchase like that.
Yeah, for sure. And, the wait-and-see approach was the Bank of Canada's decision on their previous interest rate decision. They decided to kind of pause it after months and months of continuing to cut that. Do you think that plays a role, too, in people just trying to wait and see if that interest rate comes down further? Yeah,
it's a tough position the Bank of Canada is in right now, because on the one hand, you have interest rate-sensitive sectors like housing that really need to see, further cuts, and that would obviously help bootstrap the economy. But on the other hand, now you have this fear of tariff-related price hikes, generally on consumer goods. So the Bank of Canada also has to take that into account, saying, if we lower rates, that could just add more fuel to the fire in terms of pushing up prices. So it's kind of a catch-22.
Yeah, and the one thing that your report seems to highlight is that people, you don't come out quite and say it, but it seems like people are trying to time the market. But timing the market is really an almost impossible task because nobody has a crystal ball. So what kind of a chill does that put on the market when people seem to be either sitting on the sidelines to buy or maybe even thinking, when would be that a better time to get more value out of my home?
Yeah, I mean, I think if we see more certainty, and you were talking earlier about the Prime Minister's visit to Washington, so I think the hope is that over the next month or two, we'll see a little bit more certainty in terms of, what our economic trajectory is going to be, what that trade relationship is going to be. And I think if the news is positive, then that'll give people more confidence in terms of their employment situation and ability to make a home purchase. And then you'll see people wanting to take advantage of a well-supplied market, a market where we've actually seen prices negotiated downwards in some segments, and hopefully a bit more relief on borrowing costs.
Yeah. Let's turn to the actual numbers. The price of a typical home in the GTA going for over $1.1 million. Are you seeing any price changes when it comes to condos or other types of units? And what about rental prices as well right now?
Yeah, I mean, when you think about ownership pricing, you're really looking at that relationship between demand and supply. And in the housing market's case, you're looking at sales relative to listings. And so we're seeing sales down on a year-over-year basis while listings continue to climb. And so really across most segments, if you're looking to purchase right now, you have quite a bit of negotiating power, because there's quite a bit of supply out there in the marketplace. And so that's why we've seen prices flatlined, even, edge a little bit lower over the last few months. On the rental side, a bit of a similar story. I mean, really over the last year, certainly through 2024 and the first quarter of this year, we've seen a lot of inventory there, at least in the condominium apartment rental space. And so renters have gotten a little bit of relief. I mean, we'd seen the better part of a decade with strong rent increases on the back of population growth and what have you, and now we're seeing a bit of relief there. Still high from an historic perspective, but better than what we were seeing, say, in 2023 in terms of average rents.
Jason, you're the person who crunches the numbers with a team, presumably at TREB here. How does all this uncertainty, play into the projections you try to make, the forecast you make, the sort of annual where you expect the market to go, and how much has it affected what you thought we were going to be seeing by sort of this point in the year?
Yeah, I mean, in years past, I mean, we've published a pretty hard forecast that we were very confident in. This year, we're talking more in terms of ranges, and thinking, if all else being equal and the main scenario is seeing, lower borrowing costs, the expectation would have been, higher home sales and a tightening market and potentially upward movement on price. But we also have to take into account, the fact that consumer confidence may wane, and I think that sort of lower case scenario has come into play, at least in the first quarter of this year.
Yeah, so we're kind of in this holding pattern for now in spring.
Yeah, I mean, I think there's opportunity on the horizon. I mean, again, it just comes down to if people's confidence improves, I think there's real opportunity for buyers, particularly first-time buyers who may be looking to move out of the rental market into the condominium space. And so we'll see what May and June bring.
Yeah. All right. There's always so much to talk about. Jason Mercer from TREB. Appreciate the time as always.
Thank you, Jason.
Yeah,
See you again.